Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. In an era where artificial intelligence is reshaping industries, the energy sector stands at the cusp of a revolution. Nandan Nilekani, the co founder of Infosys, envisions a future where the next UPI is energy. He predicts that millions of small producers will participate in the digital energy grid. Now, this vision aligns with the growing demand for electricity in the AI age. This was highlighted by NVIDIA CEO Jensen Huang. AI data centers need electricity. Electric cars need electricity. So, the whole demand for electricity is going to go up. These are his words. Amidst this transformative landscape, Suzlon Energy emerges as a key player in India's renewable energy sector, poised to capitalize on the surging demand for sustainable energy solutions. Suzlon was founded in 1995 and has established itself as one of India's leading renewable energy solutions provider. The company specializes in the manufacture of wind turbine generators. Now, this basically is a device which converts the kinetic energy of the wind into electrical power. As of April 2025, the company has installed more than 20.9 gigawatts of wind energy capacity globally. This showcases its significant contribution to the renewable energy landscape. Suzlon's business model is vertically integrated. It includes design, engineering, development, and manufacture of technologically advanced wind turbine generators. Now, the company's comprehensive approach extends to operations and maintenance services, which is provided under its subsidiary Suzlon Global Services Limited. The services include maintenance of wind turbine generators and common infrastructure facilities such as electrical substations and transmission lines. As of early 2025, Suzlon has embarked on an ambitious expansion plan. The company aims to increase its turbine manufacturing capacity by 1.5 gigawatts by the end of this financial year, bringing its total capacity to 4.5 gigawatts. Now, this expansion is driven by growing demand for renewable power in India, aligning with the nation's goal to boost wind energy capacity to 25 gigawatts by 2028. Now, Suzlon has substantial global footprint with the company providing O&M services across multiple continents, spanning Europe, Australia, Africa, to name a few. Its position as India's largest O&M service provider emphasizes its dominance in the domestic market as well. When it comes to its market position, Suzlon secures a strong position in the Indian wind energy market. Many analysts describe it as a duopoly in the EPC market, its closest competitor being Inox Wind. Now, because of this dominant position, Suzlon enjoys significant pricing power and has access to a large customer base, particularly as India accelerates to renewable energy adoption. Recently, the company secured a large order for supply of wind turbine generators for a 642 megawatt power project from Evren Company, planning to deploy 214 wind turbine generators in Andhra Pradesh. Now, such huge orders demonstrate the industry's confidence in Suzlon's technical capabilities and execution skills. Analyzing its financial performance, Suzlon has demonstrated remarkable financial improvement in recent quarters. Now, the last quarter of financial year 2025 showcased revenue at 2,975 crores, which represented a 91% growth year on year basis. Net profit also grew 91% year on year basis to stand at 388 crores. Operating profit, or EBITDA as it is called, stood at 500 crores, reflecting strong operational efficiency. It has recorded deliveries of 447 megawatts, which showcases enhanced execution capabilities of the company. Now, over the past 3 years, Suzlon has achieved a CAGR of 27% in revenue growth and an impressive 97% in profits. This financial turnaround is particularly significant considering the company's history where it has struggled with debt. Checking the balance sheet of the company, well, after a decade of financial challenges, Suzlon's net worth turned positive at 1099 crores in financial year 2023. The company has undergone substantial debt reduction, improving its financial stability dramatically. The current debt to equity ratio stands at a healthy 0.06, indicating minimal leverage. Checking the shareholding pattern, the promoter holding stands at 13.25 for the quarter ended December 2024. FII holding was marginally reduced to 22.87. DII holding marginally increased to 9.31. Mutual funds represent 4.14% of the shareholding. Now, this diversified ownership structure showcases retail participation and demonstrates broad market confidence in the company's prospects. Zooming out, let us concentrate on the industry as a whole. Now, India possesses the world's fourth largest wind market. As of June 2023, India had a wind pipeline of approximately 13 gigawatts, with government actively supporting expansion through favorable policies. The country has significant untapped potential, with estimates suggesting onshore wind potential of 695 gigawatts at 120-meter hub height and 1164 gigawatts at 115-meter hub height. What are the growth drivers in favor of the company? Well, India's energy needs are projected to rise substantially to reach an estimated 15,820 terawatt hours by 2040. Now, the government has established a renewable power obligation trajectory increased from 29.91% in 2024 to reach 43.33% by 2030, with specific allocations to wind energy. Enhanced assistance and favorable economic conditions have increased investor interests in the renewable energy sector. More companies are transitioning to renewable energy sources to meet environmental commitments. What are the analyst projections? What is the future outlook? Well, various analysts have given a price target for Suzlon. Investec has initiated a buy coverage with a target of rupees 70 in February 2025. Other price targets for 2025 range between 65 to 99, suggesting a considerable upside from its current levels. Geojit has set a price target for 71, valuing the stock at 40 PE multiple on its FY 2027 earnings per share. Analysts also expect a robust growth for Suzlon. Investec estimates revenue will grow at a CAGR of 55% and net profit at a CAGR of 66% between 2024 and 2027. Return on equity is expected to increase from 28.5 to 32% in the same period. Profit after tax is projected to grow at a CAGR of 30% between financial year 2025 and 27. Margins are expected to expand by approximately 70 basis points due to higher operating contributions and improving profitability of the WTG segment. Suzlon's order book has reached at an all-time high of 5.5 gigawatts, which is expected to be executed in the next 80 to 24 months. Now, the company's manufacturing capacity of 4.5 gigawatts positions it well to fulfill these orders, although there may be certain execution challenges. No company is without challenges. So, what are the risks when it comes to Suzlon? Well, the installation to deliveries ratio for the 9 months in financial year 2025 stands at just 0.25 multiple, indicating a significant slack in installation. Management has revised down expectations for WTG wind turbine generator installations to 3.5 to 4 gigawatts from the earlier projections of 4.5 to 5 gigawatts. Execution issues include transmission delays, land related challenges that could impact project timelines. The renewable energy sector is highly dependent on government policies and incentives. Changes to the subsidy structure could affect profitability. Potential global policy shifts, like the US administration's decision to halt the Inflation Reduction Act fund disbursements, might have indirect impacts on the revenues of the company. The current US administration stance on tariff also is expected to have a significant impact on energy companies, for which US is one of their major markets. Competitions from other renewable sources like solar can influence the market dynamics, so these points cannot be ignored. Looking at the current valuation, the PE ratio for Suzlon stands at 59.2 in comparison with the industry average of 46.3. PB ratio, price to book value ratio, stands at 15.4, which indicates high premium on the company's assets. Price to sales stands at 7.66, again reflecting high growth expectations. Looking at the technical indicators, according to some sources, Suzlon is trading below both its 200-day and 50-day simple moving averages, with RSI in the neutral zone. Other analysts suggest bullish signals across multiple technical indicators, including SMA, RSI, MACD, and others. The stock has exhibited high volatility, having traded between 52-week high of 86 and low of 35.50. To conclude, while studying this stock, it is very necessary that several key factors are taken into consideration. Firstly, the energy sector in India is poised for a considerable long term growth, favored by government policies and increasing demand for energy. Secondly, Suzlon has recovered well financially, with its revenue and profit numbers quite impressive. The balance sheet strength has also improved after years of debt challenges. While the order book of Suzlon is strong, the company's ability to overcome execution challenges which it has faced in the previous quarters will be crucial in realizing projected growth. The current valuation matrix suggests that high growth expectations are already factored in. Suzlon's strong market share and established presence in the wind energy ecosystem provides competitive advantages, but the landscape is evolving rapidly. It is necessary that as investors you do your own thorough research. Consult a financial advisor for your investment decisions. What do you think about Suzlon as a stock? Do you think it is investable at current levels, or does changes in the geopolitical scenarios with the US policies changing so frequently will have adverse impact on companies like Suzlon? What are your thoughts? Let me know in the comment section. Until next time, stay safe and happy investing.